Hello, my name is Tom Altieri, and I'm the broker owner of NewJersey Mortgage Services right here in Toms River, New Jersey. We are a local New Jersey mortgage broker. And, I put together a little video today for you on short sales. Now, you could be watching this on my website, or you could be watching it on YouTube. If you're watching it on YouTube, stuff I refer to on my website, just go to www.newjerseymortgageguy.com. You're going to find plenty of videos over there and webinars and everything else that'll make you a real well-informed home buyer or refinance person. Anyway, we're going to talk about short sales, and I want to preface that by one thing. You need a good real estate agent, somebody that is a professional that understands and knows short sales. They'll be able to get you through, because there's a lot of pitfalls. And the most important pitfall is if you get yourself tied up in a contract on a short sale and a beautiful house comes along around the corner that's maybe just as good a buy or a better buy with these low interest rates, you don't want to take yourself out of the marketplace. So you want to work with somebody that's a good professional and know what they're doing. Now, one of the pitfalls that I see with so let me just explain to you what a short sale is. So a short sale is basically the seller of that home negotiating with his lender to allow him to sell that house to you for less than what he owes on his mortgage. And a good example of that would be he owes $300,000. The house in today's market is worth $250,000, so he's trying to get the lender to accept $250,000. Now, the benefit to the lender is that they can write off that difference, if they want to, and they can get this house off the books and not have to worry about foreclosing, because more than likely the seller of that property is down on their mortgage. When I say down, I mean behind. So one of the things they're going to do, because anybody can just say, I want to stop paying my mortgage and sell it short. One of the things they're going to do is they're going to require the seller to provide them with a package. So it's going to be a broker's opinion of market value there. It's going to be the seller's W-2s, pay stubs, and any assets they have, bank accounts, other properties. They're going to want to see if they, or if they're unemployed, and then they're going to want a letter of explanation why they're in that situation. So that's what the bank will require. But what the bank will do also is they'll send out some brokers to do these broker opinions of the property to see where fair market value is. Some lenders actually do appraisals on properties, full formalized, paid for appraisals. And the broker opinions are paid, but not paid as well as an appraisal. So, and that's going to determine, a lot of lenders today, want between 90 and 100% of fair market value. Fair market value may be $250,000 on that $300,000 loan, and that's what they want. So, just to avoid, any non-arm's length transactions, this is how the process is done. And then some lenders, take anywhere from 2 weeks to 6 months to get back to you on these things. So, that's, one of the other pitfalls is that, the length of time, the seller may be in a position to continue to pay the mortgage and, just doesn't want to pay the mortgage. And, because of that, the lender just may not take the deal. Okay, so the other pitfall that I see is some lenders, when you buy a house and get a mortgage, you sign a mortgage and a note, and, they'll forgive the mortgage or cancel the mortgage, but the note they will not forgive. And what happens is on that seller, they'll put a deficiency judgment. So most attorneys, ask that the note be forgiven. And in some cases, they don't want to forgive the note. And this can blow up a deal on you, because the seller will say, why should I sign the note? Just let him foreclose. I don't want to owe him this money forever. So that, that's another pitfall. Another pitfall that I see is, some properties have equity lines of credit, second and third mortgages, judgments and liens. Sometimes there's a judgment against the property from the guy from the landscaper. It could be from anybody from the landscaper to the plumber. Liens could be, the city, the tax liens against the property. So there could be judgments and liens. You always want your attorney to do some kind of a initial search to see what you're up against there, or find out from the listing broker, if they know what kind of liens are against this property. So those are really, the most important things that I've seen up until today, what you really have to look out for. And I hope that's a, good enough explanation for you on, what exactly a short sale is. Now, again, with these low New Jersey mortgage rates, and the abundance of homes for sale in the state of New Jersey right now. I would do some really wise shopping and don't take myself out of the market with a short sale, unless it's the best deal in town. Okay, now if you need to reach me and you have any questions because our New Jersey mortgage rates are so low, you just give me a call at 1-800-789-9293. If you're on the website, obviously the phone number is up there. Now, if you're not on the website and you're watching this on YouTube, I want you to go to my website anyway, and I want you to go up and there's a box right above my head. It's an 81-page free home buyer's guide that I put together specifically for buyers of new homes, buyers that are upgrading, and there's great useful information in there. And it's free. Just go get yourself a copy. Or if you'd like to watch some good webinars, we have webinars anywhere from a half hour to an hour on any possible subject you can think of regarding housing. And you can watch them from your computer at your convenience. Just have to sign up for one. And and then you just go to the website if you're again watching this on YouTube, and that website is www.NewJerseyMortgageGuy.com. Okay, have a great day, and I hope this was useful.